Good day, students. Welcome back to Payroll Accounting 2023 edition. This is for my Accounting 1329, Payroll and Business Tax Accounting. This is Dr. Mercado welcoming you back to another lecture. In this particular lecture, we are going to be covering problem 59A. Okay. Now, problem 59A does have a short video included in or embedded in Cengage, but it does not provide a lot of level of detail. I have a lot of students struggle with this problem, so that is why I wanted to go over it. That way, hopefully, my lecture will supplement the information that you have obtained from the chapter, from the Cengage video, and hopefully it will put the pieces together. Okay, so we are going to be working on problem 59A today. Okay, so problem 59A. It says the partnership of Keenan and Klutlow paid the following wages during the year. And then we have a list of employees. We've got two partners, Keenan and Klutlow. We've got Perry, who's a supervisor, Lee, a factory worker, Rolf, a factory worker, Brock, a factory worker, Ruiz is a bookkeeper, and Rudolph does some maintenance. We have that along with all of the wages for the year. In addition, the partnership owed $200 to Rudolph for work he performed during December. So we owed Rudolph some money. However, payment for this work will not be paid until January of the following year. The state unemployment tax rate for the company is 2.95% on the first $9,000 of each employee's earnings. We're being asked to compute the net FUTA tax for the partnership for this year and the SUTA tax for this year. Okay, so let's see what we have to do here. So we have a whole bunch of employees. We have to figure out the FUTA and SUTA tax. Okay, we know that for FUTA, we pay taxes on the first $7,000 of earnings. The FUTA is paid by the employer. Okay, FUTA, the limit is $7,000. For SUTA, it depends on the state. The SUTA tax varies by state. In this particular example, they are telling us that the SUTA for the state will be assessed on the first $9,000 of each employee's earnings. So for my SUTA, my cap is $9,000. So we're going to break down the information by employee and figure out what is taxable for FUTA and SUTA. Okay, so what I did, class, is I basically copied the same data over to the right hand side. I just got the name of the employees and their earnings. Okay, I entered some additional columns. I've got my FUTA limit, my FUTA excess, my SUTA limit, and my SUTA excess. I'm trying to figure out here, this is for simplicity of you visualizing what is not going to be taxable. Okay, how much of the wages that this employee makes will not be taxed for FUTA and SUTA. Okay, so we're going to begin with Keenan and Klutlow. Now these two are partners, and we read in the chapter that partners are not subject to FUTA and SUTA tax. They are excluded. Okay, so for my Keenan and my Klutlow, those two partners, we do not have to assess any FUTA or SUTA tax, so those will be zero. Okay, just make a note of that. A very common mistake is that students include them in the calculation. If they are partners, they are not included for FUTA and SUTA tax purposes. Okay. Next, we have Perry, who is the supervisor. Perry earned $53,000. We know that for FUTA, we only pay taxes on the first $7,000. So that means that the 53 minus the 7, that means that $46,000 is not taxable. Okay. For SUTA, we know that our limit is $9,000. That was provided in the problem. So I know that Perry earned $53,000. We're going to pay taxes on the first 9. So that means that $44,000 are not taxable. We're going to do the same thing for all of our employees. Okay. I basically copied and pasted my formulas down. Now let's look at these that have negative. Okay. Brock earned $6,900, and we know that our cap is 7. Okay, so we're only going to pay taxes on the $6,900 that was earned. So Brock does not have any excess because he's earned less than the 7,000. Okay. The same thing for SUTA. My cap is 9. He's only earned $6,900. So that means Brock does not have any excess earnings because he hasn't even reached the cap yet. For Rudolph, the same thing. Rudolph only earned $5,100. We pay taxes on 7. Okay, so I know that Rudolph does not have any excess because we haven't reached the cap yet. The same thing for SUTA. My SUTA limit is 9,000. Rudolph has only earned 5,100, so that means there is no excess for Brock or for Rudolph. Okay, those two employees have not reached the cap, the FUTA limit or the SUTA limit established. Okay, so now the $314,800 represents how much my employees earn. That is my gross payroll. The gross payroll is $314,800. Now, I need to deduct the payroll to my partners because that is non-taxable. Okay, any wages earned by my employees that are or for my partners is not taxable. So I need to deduct that because I'm not going to pay any taxes on my partner's wages, and that means that Keenan earned 85,000 and Klutlo earned 75,000. So that means that $160,000 are not taxable, okay, for FUTA and SUTA tax purposes. We do not pay taxes for FUTA and SUTA on partners. Then I'm going to deduct any of my excess, okay? These are any salaries beyond the $7,000 limit. We are calculating FUTA first. Let's focus on FUTA. So, salaries beyond the $7,000 limit, I know that the excess amount is $114,800. That represents the amount above the $7,000 by employee. We did an analysis. We compared the earnings to the limit and then we calculated the excess. So we are going to pay taxes on $7,000. This is a taxable amount. $46,000 not taxable. Okay, so I'm going to pick up my total of $114,800. That represents the amount of wages that are above my cap of $7,000. Okay, so now I can calculate my, and this should be a deduction because it's minus $114,800. Okay, why doesn't it want to do it? Let me see. Okay, so now I can calculate my taxable payroll. Okay, so I earned, or my employees earned, $314,800. I deducted the payroll from my partners of $160. That is not taxable. I deducted anything above the $7,000 mark for each of my employees. That gave me my excess of $114,800. So that means that my taxable payroll is $40,000. Okay, I'm going to multiply that by my FUTA rate. Remember, your FUTA rate is 0.6%. So we get our 40,000 times 0.6%, and that will give me a tax of $240. That represents my FUTA tax. This is for the administration of the federal and state unemployment programs. Okay, that is requirement A. Requirement B says to calculate the SUTA tax. This is a state tax, state unemployment tax. Okay, so once again, we begin with our gross payroll of $314,800. That does not change. Okay. Now for SUTA, the problem says that we pay taxes on the first $9,000 of earnings. Okay, so we compare how much we made and we subtract the excess. Okay, so we know that this employee, Perry, made $53,000. I'm going to pay state unemployment taxes on the first $9,000. So that means $44,000 is not taxable. The SUTA excess column represents the non-taxable portion. This is the excess. This is above the $9,000 mark. So first we're going to deduct our payroll deduction for our partners, and we had already calculated 85 plus 75 gives me 160. So we're going to deduct that because we're not going to pay any taxes on that. Less salaries beyond the $9,000 limit. My SUTA limit is $9,000. How much salaries did I have above $9,000? We have $106,800. Now I can calculate my my taxable payroll for SUTA purposes. And that would be $48,000. So yes, my employees got paid $314,800, but we are only responsible to pay state unemployment taxes on the first $9,000 of earnings. So $106,800 will not be taxable. Okay, and that gives you a balance of $48,000. We're going to get our $48,000, and we're going to multiply by my SUTA rate. The SUTA rate was provided in the problem at 2.95%. Okay. Let me start this over. So it's 48,000 times 2.95%. So that's going to give me a SUTA tax of $1,416. Okay. So now we have both our FUTA tax of $240 and our SUTA tax of $1,416. Okay. Very important that you break up the information between what is taxable, what is not taxable. This represents the taxable portion. We paid $7,000 on the first $7,000 of earnings for FUTA. We pay $9,000 on the first $9,000 of earnings for SUTA. If the employee goes over, we have to figure out the excess because that portion will not be taxable. If the amount is under, like in this case for Brock, he only earned $6,900 when the cap is 7, then we don't have any excess. Those $6,900 will be taxed. Okay, the same thing for SUTA. My SUTA limit is 9 because Brock only earned $6,900. Then there is no excess for Brock. That means that the whole set $6,900 will be taxed for SUTA purposes. Okay, please organize your data. Read over the information. That way you understand. Okay. Now, there's this issue with these $200. Okay. The important thing here is to remember that we owe $200 to Rudolph for the work he performed, but we don't pay any taxes until we actually submit payment to the employee. Okay? It says payment for the work will not be made until January. So in January when we make the payment, then we will pay our FUTA and SUTA taxes. Okay? So even though we owe, we do not record the amount in our books until the actual wages have been paid. Okay, so that is basically the problem for 5.9a. Very straightforward. It's just a matter of organizing your data so you can easily visualize how much have I earned, what are my limits, how much do I go over those limits by. Those amounts will represent that those amounts are not taxable, and that way you can figure out the taxable amount. Okay. So that is it. I want to encourage everybody to please read the chapter, review the PowerPoints, review any videos posted within your homework assignment. And if you have questions or concerns, please do not hesitate to reach out to me Monday through Friday, and I will try to respond as soon as I can. Okay. So that is it for this extra lecture. Until next time, have a wonderful rest of the week. Bye-bye.